Time for our business segment now, and for that we'll be zeroing in then precisely on those trade ties between France, Europe, and China. This again as Emmanuel Macron and Ursula von der Leyen are expected to land there imminently today on Wednesday. Charles Pellegrin, our business editor, is here with more.
That's right, Erin. The visit happening a few months after the world's second largest economy has fully reopened. So many seeing here an opportunity to really revive business ties. As a reminder, China is the EU's third largest partner when it comes to exports and second when it comes to imports. Well, the French president is accompanied on this trip by a huge delegation of business leaders, 60 of them, including the heads of state utility giant EDF as well as aviation group Airbus, some of whom will be hoping to sign lucrative contracts with Chinese partners. While one key agenda item for the Europeans and for France specifically will be to try and rebalance commercial ties with China. Last year, for instance, France imported 77 billion euros worth of goods from China while only exporting 24 billion euros. That trade deficit has grown steadily steeper over the years. And there seems to be a lot of optimism in French ranks about the possibility of resuming normal trade relations with China, but the world has changed considerably since Macron's last visit in 2019, and Beijing has been designated a systemic rival in Brussels. This explains the different tone held by EU Commission President Ursula von der Leyen ahead of the trip. She spoke of de-risking the bloc's relations with China.
The European Union needs to define its future relationship with China and other countries in sensitive, high-tech areas, such as microelectronics, quantum computing, robotics, artificial intelligence, biotech, you name it. We need to ensure that our companies' capital, expertise, and knowledge are not used to enhance the military and intelligence capabilities of those who are also systemic rivals.
And one of the sectors deeply affected by the rise in geopolitical tensions between Beijing and Western nations is that of microchips. U.S. efforts to cut off Chinese access to key technology and equipment that make advanced chips on national security grounds has led to what seems to be a riposte from Beijing. The Chinese government launched a probe into U.S. chip firm Macron last week. The Ministry of Foreign Affairs defended it on Monday as, quote, normal regulatory measure to maintain, quote, national security. And let's move on now for a quick look at the markets this hour. Markets in China and Hong Kong are shut this Wednesday for Qingming Festival. The Kospi in Seoul making gains, though, up just under 0.2%. The Nikkei in Tokyo, meanwhile, is trading down below 1.6% on the back of an American labor report showing job openings dropped to their lowest level in nearly 2 years in February. While this could be another cue for the Federal Reserve to stop raising interest rates, investors are also concerned it's a sign that the economy might be slowing down too much.
What we believe is going to happen is that we're going to have rolling recessions. We've already experienced a housing recession, and now we think that we're going through a manufacturing recession. We don't think that recessions are it's just going to be one big recession all at once. We think that it's going to be more industry driven and that they're going to be rolling.
Let's also keep an eye on benchmark prices for oil. They're still climbing after the surprise supply cut announced by OPEC Plus over the weekend. Both the West Texas Intermediate and the Brent crude easily over the $80 mark. The West Texas Intermediate trading over 0.5% higher. Same for the Brent crude. Healthcare giant Johnson & Johnson has made a new offer that it hopes will put a decade-long legal battle over concerns its talcum powder causes cancer. The new settlement of $8.9 billion is meant to resolve tens of thousands of lawsuits, and in spite of a ruling in January which shot down a previous scheme which involved using bankruptcy to settle the claims, this new settlement would also involve a J&J unit filing for bankruptcy. A dozen law firms representing about 70,000 defendants say they support this draft deal. J&J, meanwhile, says this does not amount to an admission of wrongdoing. And that's it for the business news so far, Aaron.
Charles Pellegrino, our business editor, thank you very much. Well, that's all we have for you for this edition. Stay with us. I'll be back in just a couple of minutes with another look at the day's top stories.